Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 22nd of September. All right, now it's really sort of the clocks are ticking here. We've got the FOMC meeting coming up. It's all about, will the Fed announce a tapering timeline, right? That's the whole focus for the market at this point. Obviously, no change of rates expected. We are hoping they come out and give us specifics and say, you know what, we're going to start tapering in November or December. At this point, they are still aiming for the end of the year. So actually, this is one point. If they come out and say we're going to start tapering in January, well, that's actually probably going to be a little bit disappointing, but still good, right? That'll be a confusing one for the market. Now, with the Fed, right, if they do give us a specific timeline for when they're going to start tapering, the easiest way to connect the dots will be the yields, the Treasury yields will go up, equities should come off, right? The dollar pairs should go up like they are at the moment. That's the dollar index, the dollar Swiss, dollar yen, dollar CAD, and the dollar block, which is euro, sterling, Aussie, Kiwi, should go down, right? That's the flow of the whole deal. Now, if we do get clear bias out of the Fed, the dollar will be strong, right? It'll be strong not just for today, for tomorrow, and for probably the next 2 weeks until the next non-farm payrolls. So that makes it easier to attack the other data releases. Because we've got one side of the quote with a specific bias, you know exactly what to do. And ideally, you would be looking for weak data, whether it was weak Aussie data, weak German data, weak response from the Swiss. The Swiss National Bank will be a non-event, as it usually is, but that's what we're looking for. So trading around this release can be problematic, right? It can also be the start of the trend, right? So to me, what you want to try and avoid is the volatility around the release. So to me, you would be looking for a small position, right? Whether you're trying to get it in at market, right? Get in with probably a quarter of your position, and you can build it. So if it's very clear, at least if the currencies drop, well, you're in a trade straight away, right? That's the key to it. But you know, this is what you've got to understand. The Fed coming in and doing something is partially factored into the market. So, you know, sell the rumor, buy the fact. What can actually happen is it has a little dip, it retraces. How far does it retrace? It's always hard to guess how far that is. But what you want to avoid is, and stay in the position, are these retracements, if there is some sort of comments from Jerome Powell. So ideally, in that situation, you get the move down, a retracement back, and then it goes. So going in with a small position first allows you to stay in the trade. You have a small position with a larger stop loss, right? If your retracement position, say number one, number two, the stop losses are generally at the same level, then you can start to build a position around the volatility as it settles down. If they do give us a clear timeline for the tapering, well, what we should see is the bonds start to rally. That'll be the confirmation that the dollar's going to rally. Equity should fall. Sorry, excuse me. The dollar rallies and the dollar block falls. Now, what major pairs or what instruments do you trade? Well, you could be hitting the equity indices for sure, right? If you've got access to those, the majors, absolutely, right? Which major currency pairs do you hit? Well, to me, it's you come back to the pairs with the best technical setups. Now, these are hourly charts, right? So like the dollar block has got a clear sort of short-term downtrend at the moment. And the dollar pairs, well, the dollar index is going up and dollar CAD is correcting. Dollar Swiss and dollar yen are sort of involved in a bit of a safe haven trade, right? A bit related to what's coming up with the Evergrande real estate fund in China issue. That's another thing that we'll deal with after this event. So you're looking at those instruments going, okay, well, what do I actually hit? Because if you're waiting to look for the Treasury yields to move and then the equities to move before you get in, well, it's possibly going to be too late. One way to prepare technically for this is to come back, get your daily charts up and focus on the pairs that are right at break levels now, like euro. Sterling's already gone through. Aussie's hasn't gone through yet, so that's a good one. I'd say euro and Aussie to me straight away. Dollar CAD potentially as well, especially if oil continues to fall. The dollar index, if you've got access to that. I'm still not confident with dollar yen and dollar Swiss because of their sort of safe haven sort of characteristic. Sterling, we've got Bank of England in a day or so. That's a long time in the markets. It should just move with where euro goes. But to me, straight up, Aussie and euro are the major pairs. Kiwi should catch up, but once again, the RBNZ's doing some different things there as well. All right, so that's where we are, guys. It's pretty exciting. Main focus, obviously, right now, FOMC is get your risk management up to speed. Make sure you understand what the Fed is going to be doing. And the easiest way to do that would be to go to the Federal Reserve homepage, get up their last statement, see what they're talking about. They have been sticking to the plan very well. They'd love to give the market a timeline because it gives them control of the financial markets. It's either going to happen now or after the October non-farm payrolls. That's all we need, right? If they go now and we get strong non-farms in October, well, the dollar's going to really be trending medium to long term by then, right? Which isn't far away. You want to be trading before then. Now, just on the other side of it, if we don't get anything out of the Fed, right, no clear timeline, well, I think the currencies will drift back into the range and we're back to range trading from there, right? So once again, if they don't do anything, I think we'll see the euro at least back up at 117.60, sterling back up, testing this resistance line, Aussie back to 72.80, 73 the figure, and same for Kiwi. And I'd say dollar CAD will be back around 127, right? That's if we don't get anything clear from the Fed, right? But the key to this is just keeping an eye on the bond markets, right? If the market's confident with what they're doing, they will rally. That'll put downward pressure on the equity markets, and that's where the dollar rallies and the dollar block falls. That's our clear scenario. So look for these things after the release. It will confirm what the dollar's going to do. That's the safest play. All right, guys, all the best. Good luck and cheerio.